Hello guys, welcome to the Trading Parrot. Future spot arbitrage bot. That's the topic for today. We're going to be covering these types of bots on Pionex really in depth, covering everything from what are all the risks. We're going to cover backtesting, almost 2 years of data of backtesting for 4 important pairs, so you can have a fair understanding on what you can expect from running these types of bots on Pionex. We will go in detail on how to mitigate the risk, how to make the maximum rewards from these bots. So stick around up till the very end, because I'm pretty sure you're gonna find a lot of answers in this video. But before we get into that, make sure you look at the link in the description. If you're planning to sign up for Pionex, you can get 25 BUB free, and as soon as you start trading with grid bots, you're gonna unblock those 25 in your account immediately. Let's start first with what is exactly an arbitrage bot. An arbitrage bot is a bot that profits from differences in the value of an asset in 2 different buckets. That's mainly it. A traditional arbitrage bot will put funds in 2 separate buckets, and given the difference in prices, the fluctuations that they are constantly between these 2 exchanges, then you can profit from that. But in this case, the futures spot arbitrage bot does something very different from a traditional arbitrage bot aspect. But this type of bot in Pionex, the futures spot arbitrage bot, does something completely different. It basically places a long position on the spot market. Let's say it buys 1,000 of BTC, and then on the futures account, it opens an equivalent position, but shorting the same asset. So you get these 2 open deals at the same time, and you end up in a neutral position. You don't mind if BTC goes up or goes down, because literally you stay there zero. There's no profit from the differences. So in that sense, it's different from a traditional arbitrage bot. So you're going to ask, then how you make the money with this type of bots? Well, in futures, there are funding rates that are applied constantly to people that are doing longs on futures or people that are doing shorts. Most of the time, the people in the market are doing longs. Therefore, the only way that Binance has to maintain the price of the perpetual similar to the spot price of Bitcoin is by charging these funding rates to the longs or to the shorts, and then giving those fees to the opposite. For example, if BTC at the moment, most of the people are doing longs, in order to maintain the price the same with the spot, they are going to charge the funding rates to all the longs, and they're going to give those fees back to the people that are doing shorts. When you are on your futures account, you can always check the funding fees when you go to information and funding rate history or real-time funding rate. And because most of the time those fees are positive for the people doing shorts, you end up capitalizing on getting those fees. So you don't make money from Bitcoin going up or down, you make money from holding that short position on Binance futures. So the next question you're probably wondering is, okay, hold on a second. I'm holding a short position on Bitcoin. Yes, you are holding a futures position, a short futures position on Binance. But at the same time, you have a long. Therefore, you're in a neutral position. That mitigates the risk a lot, but not 100%. Of course, there are risks, which takes us to the next topic. What are all the risks of running these bots? Can you lose money when running an arbitrage bot of this type? In theory, yes, but those risks are extremely low if you're running the future spot arbitrage bot on a very stable coin like Bitcoin or Ethereum. Compared to other smaller caps, those coins are very stable. And what I mean is that you don't see those tokens pumping to the upside 100 or more percent, whereas on a lower cap, you can even see 1,000% up. And that's a terrible idea to run on an arbitrage bot, because you are under the hood, you're running a short position with leverage. You don't want to get liquidated. Now, the risk is very small very small, but there is a risk of liquidation, obviously. We're going to look in this video where to find what's your liquidation price when you're running this bot, so you can have a fair idea of how risky it could be that you get hit by that price. But just so you know, that short position is actually placed in isolated mode, which means that it doesn't liquidate the whole account, just the single position, in case it happened. But what needs to happen for you to get liquidated? Well, the price will have to go very high, very quick. And what I mean by very high, for example, on BTC, if now we are at 45K or we are at 50K, we will have to go literally to 75K on Bitcoin or 80K in very short period of time, which is basically like a 50% straight away in the price of Bitcoin. So as you can see, that is possible, but it's very low likely. Stick around until the very end of the video, because once we are looking into how to create a bot, you're going to be seeing exactly in the parameters what is the liquidation price. We are also going to explain how to increase that liquidation price, so therefore you reduce the risk of hitting it. Remember, it's a short position, so the higher the liquidation price, the less likely that you get liquidated. Personally, I'm going to run it just with the default, and I'm going to run very stable tokens like BTC and Ethereum. Now, what are the rewards of running this thing? This is the main reason you're probably watching this video. You probably have in mind, should I be staking or should I be running a future spot arbitrage bot? That's a good question. In this video, I'm not going to cover how much you can make by staking, but I'm definitely going to give you a very good idea what you should expect. And this is what takes us to the next topic, which is backtesting. How am I backtesting? How am I backtesting these arbitrage bots? Well, I found that in Binance, you can go to information and then to funding rate history. This takes you to this page here that's only showing you 14 days of the funding rates, which is not very useful because in the last 14 days, things have been pretty good. But if you hit save as CSV, it's going to save a large file that contains 1.7 years of data at a frequency of every 8 hours. Oh, I think I didn't mention, every 8 hours you get paid the funding rates. So 3 times a day you get paid here. What we are looking at here is the Ethereum pair. What I did is, with that file, I went to import. I imported in a new sheet. After that, I selected these 2 columns and I created a chart, and the default chart is good enough. And as you can see, Ethereum is perfect in my opinion for running an arbitrage bot. The funding fees, they remain positive most of the time, and the only times they have gone down was on the COVID period around March or April in 2020, and then recently during the dump in May in 2021. Apart from that, you get every now and then a slightly under zero rate that it's fine because it compensates with these high fees that you get later on. The more longs that are in the market on futures, the higher the rate and the more you get paid every 8 hours. So the $1 million question, if you run this arbitrage bot for exactly the period of data that we have, 1.7 years, how much money would you make? Well, if you do it with simple interest, basically what Pionex is offering you by default, let's say you set up the bot on day 0, you never look back until today, then you will have made 59% in 1.7 years without doing anything at a very low risk. That is really a strong contender to staking, in my opinion. And it's not a replacement, but it could be a great complement to spread, and diversify. You could have some in staking and some in arbitrage bots. Definitely a good contender. For those of you that are wondering how can we do compounding and increase those returns, yes, you can do that on Pionex, but on Pionex, you cannot do it automatically. I haven't seen any competitor that allows you to do it automatically, the compounding. But if you do it even once a month, you will be somewhere between these two profits. So you will be sitting in between 59% to 81% returns for 1.7 years. So let's say you make 70%. That's amazing, amazing. But how can you compound? Well, very simple. Once you have some spot futures arbitrage bots running on your account, you can head down to more. And then here you have a bunch of features. One of them is release the profit. If you release the profit into your account, then you can fit that back into the bot by doing add investment. So this feature here allows you to give the bot more money to trade. So let's say after 1 month, you made a 1%. Then that 1%, you release it into your account and then you give it back to the bot. And that's all you need to do to be doing compounding. You can go a little bit higher, maybe do it every once a week, but I will say it's something that takes you probably 1 or 2 minutes to do. By the way, here you can also do some other things. You can withdraw the investment partially or fully, or you can stop the bot with close. Or here, there's something very interesting for the advanced users. I do not recommend beginners to start messing around with this, but definitely it's something for advanced users, especially when you're trading lower cap tokens on an arbitrage bot. If you get tempted to run one of those sexy tokens that are giving you even 30 or 60% a year, that's great. But you should definitely consider in that case to increase the margin. When you hit add margin, it takes you to here, which is a great screen. It's showing you exactly where you will get liquidated. In this case, you get liquidated when you get to 75K. And if you start adding more, you add $1 extra, and then you get liquidated at 76. If you add 10, 84, 100, 174. So you can see that having on the side 100% next to the bot running is almost doubling my liquidation price. Now, all of this is using the 2x leverage, which is the default. If you go for 3x, then of course you're going to have a shorter liquidation time frame, which is higher risk, of course. The higher the leverage, the more exposed you are. That's always the rule. And the same is if you reduce the leverage to just 1x, then your liquidation price is going to be way above and you're going to need less margin to protect yourself. Now, don't get scared. I'm personally not planning to add any extra margin. I'm going to let the bot do its job by itself, but I'm going to stick to stable coins. I'm going to stay away from the ones that are offering the top rates because those can have fluctuations that are much more painful. You can add the margin, but you can also remove it. So if you're fearing that a token is about to pump and it's going to go very high and you might risk getting very close to that liquidation price, you can head down straight to your account and add margin immediately. And when things turn back to normal or to bearish, then you can withdraw that margin. But remember, on stable coins, is less necessary, and on 2x or 1x is also less necessary. This becomes extremely important to know how to do it if you're going with small cap or if you're going with higher leverage. 3x is the maximum, by the way, on Pionex. Another very cool thing is that when you're looking at your bot details here, all the arbitrage bots that I'm running, is that you can see all the fees that you've been paid every 8 hours, exactly here. You can also see the opening fee. When you start the bot, you get charged this, which, as you can see, after 3 or 4 fees paid to me, it compensates. So you break neutral if you at least run your bot for 1 day. You can also see the estimate arbitrage profit that you are supposedly going to take in 5 more hours in this case. And you can see how it's settling. Sometimes they show here when it's settling. It's very interesting how it works. This bot has been running from the 25th of August, so basically roughly for 1 week. Very little profit here that you're seeing on $100 invested. I'm not expecting more than that. According to the backtest, this is going perfect. As I say, this is a long-term strategy and you can expect to get a 60% or a 70%, but you need to keep the money for at least 1 year here to see those returns. Now let's go to other backtestings that I have. Ethereum, I have to say, one of the best that I really like because the balance between the risk and the reward is really great. But let's go to BTC. Let's say you run the BTC. BTC, compared to Ethereum, has less daily profit. The funding fee on Ethereum is 0.03 and it stays positive most of the time, whereas BTC has some bigger fluctuations. In COVID and also during May, it stayed below zero for quite a long time compared to Ethereum. But still, it's offering for 1.7 years, 55% on compound interest. On Cardano, you get 56% and 76% on compound, but the period is slightly smaller. And THETA is the worst performing of these four tokens, only 0.01. So that's roughly 1/3 of what you get with Ethereum, is half of what you get with BTC. And you can clearly see how long it remained negative, the funding rate on Binance Futures, which explains the poor performance of this token. But still, you're still making a 9% here. It's still way better than you can get in any bank out there. I pick on purpose THETA because it was really poor performing. So I wanted you to see kind of the range. And definitely these are not the top performers because I'm intentionally not picking any extremely high performer. I don't want to encourage people to run the most risky ones and then have to do manual intervention. I guess if you want to run bots, it's because you are liking the fact that things can be done by itself. If you push it too hard and you pick a very low cap, of course, it looks sexy on paper to get 60% a year, but then every now and then things are going to be pumping too high, going to be risking getting liquidated on the short, or the funding fees might stay negative for very long as well. So I think Ethereum, Cardano, and BTC are a good compromise, and you can run all of them in parallel as well. You don't have to be guessing which one is the best. You can spread the risk and diversify. In my case, I'm going to do that together with staking to all of that form part of my very conservative portfolio. If you head down to market and then ranks and then arbitrage, you're going to find this very interesting page here. It shows the performance, kind of the back test as well, of all the supported tokens for arbitrage. You can see at the top cap coins and then leverage tokens of top cap coins. At the moment, I'm sorting by 180 days back testing. What does it mean, this 7-day, 30-day, and 180 days? Some people were getting confused. They were saying, oh, I'm going to be getting 33%. That's amazing. In 30 days, I'm going to be getting 34. And then in 180 days, 34. Wait a minute. That doesn't make any sense. No, it's completely wrong, that interpretation. The right interpretation is on 7 days, the funding fees that you were getting every 8 hours, if they were applied for a period of a whole year, you will have made 33%, as long as those fees remain in that range of the last 7 days. On 30 days, it's exactly the same. If the funding fees of the last 30 days in average remain the same for a whole year, then you will have made that. So you can see that these funding fees have remained really consistent. That is what you can interpret from here, at least for the half past year. Now, if you ask me, I'm not very familiar with this token. I wouldn't put this as part of my conservative portfolio to run with a token I don't even know enough. I am running Avalanche, but the whole purpose of Avalanche was that I thought it's becoming more and more a stable project. So I trust Avalanche, but at the same time, there's a lot of people trading. So I was expecting that the funding rates are going to be higher. They've been higher. As you can see, they've been higher, at least compared to BTC. I'm not running the Ethereum yet, so I cannot compare the performance of the last 7 days. But the current funding fee of Avalanche is very high, 0.05, almost 0.06, which is very high. You're going to notice that you can pick between 1x, 2x, and 3x. Of course, if you're running 2x is the recommended one. It's kind of a middle ground. 1x, you're going to get paid less. You can also see the performance, how it is impacted if you change this. On 3x, of course, you're going to make the most returns, but also is the most risky in terms of the likelihood of getting liquidated if the token pumped too high. So now, how can we set up a bot? It literally takes less time than the time I'm gonna take to explain this. It's probably gonna take you 1 minute. Challenge accepted, 1 minute to set up this bot. Step number 1, you're gonna head down to trade. And here you're gonna find the spot futures arbitrage bot. As you can see, is the risk of this is qualified as flexible. It doesn't really care what's going on with the market. Once you select create, you're going to see this section here appearing. We're going to again see the results of backtesting. We're going to be allowed here to enter how much we want to invest. Then if we keep all things in default, you just hit create and then you wait for the bot being created. It takes a few seconds. And after that, it's all done. Where can you find your bot running? You go to my orders, my trading bots, and you're going to find it as a arbitrage bot. You can also filter here like that, and you're going to see it in an expanded way. Again, if you want to create another one, you go to trade, spots, futures, create, and you're going to find it here. Now, you're probably wondering, what are these advanced settings? We already explained the 2x, 3x. The 2x is the recommended, but then there's this interesting guy here called the price gap control. If you're going to start one of these bots, wait for the highest gap possible. What is the gap? The gap is the difference between the price in the spot market versus the perpetual futures market. When the difference is positive, it means that the price of the token is higher in futures. The whole purpose of this bot is first to buy on spot along and on futures to place a short. If the gap is positive, you end up starting your bot in the best conditions because technically you are longing at cheaper price and shorting at a higher price. That's perfect for starting the bot. And the same applies for stopping the bot. When is the best time to stop the bot? When the current price gap is the lowest possible or even negative. If it's negative, it's perfect time to stop the bot. Personally, I just leave it exactly as the default. But I follow that advice. If I see a negative here, I will never start my bot. I wait for a fairly high price gap to take the best advantage when I'm starting the bot. Now, most of the time it's positive. So if you see negative, just stay away from it. Don't start it. Come back the day after and wait until it's 0.1 or 0.2 something. I'm going to leave a link in the description to this spreadsheet so you can have a look. You can also see what formulas I was using to calculate the different interest, which is very interesting way of forecasting how things can go. One final and very important question. How often do you have to be keeping an eye on the arbitrage bot to make sure that it's not going negative? As you can see here, the funding rate is negative. So some people, what they're doing is at least once a day, you check your notifications in the Pionex app and you keep an eye on how is the funding rate going. Now, this is not as relevant for stable coins compared to low cap tokens. So if you're running a low cap, definitely download the app and make sure you are keeping an eye on the funding rate. Of course, you get more reward, but it's going to come with extra work for you. You're going to have to keep an eye on where are the funding rates every day to decide whether you want to start or stop the bot accordingly. But ultimately, I really think that this is a great alternative to leave your money in a conservative bucket that you can think of a long term. Compounding once a month, great idea. And once you are able to backtest, you can decide which tokens are providing a better risk reward. If you're thinking to open an account on Pionex.com, make sure that you use my referral link. You're going to get automatically 25 BUB as long as you deposit some funds and you start a grid bot. That unlocks the 25 BUB, which goes straight into your account. You can really open an account in minutes. But if you open the account and you haven't done KYC, I think that's totally fine. These are the maximum and minimum withdrawals if you don't have KYC. With KYC, they increase significantly, but without KYC, you can withdraw every day. These are the withdrawal fees. They are very fair. Commission fees for trading are very low. They are considerably smaller than other exchanges. So I think those two last points makes it a very attractive alternative. Guys, I hope you like this video. I hope you found most of the answers to your questions. I'm looking forward to your comments. I want to know if you are considering to run this together with bots, or you're going all conservative and now everybody wants to run arbitrage bots only. To be honest, I wouldn't be surprised. Let me know which other of the 12 different bots that you have on Pionex you would like me to do an in-depth video like this one. So far, I cover grid trading, I cover the spot futures in this video, the infinity grid, but I haven't had a look at rebalancing bot, BTC Moon, ETH Moon, leverage grid, margin grid. These are the higher risk ones. There was a lot of demand of people wanting to know about the arbitrage bots. So I hope you enjoyed the video. Okay guys, I'll see you in the next one. Bye.